Before we slip into a short break, we have one more discussion to do here. IRDAI has allowed a higher agent commission within the overall expense cap, now modifying its August 2022 proposal to drastically cut commissions. Under the new proposal, commissions may not come down, but one can save on premiums by buying policies directly from insurers. It could also eliminate the dubious practice of giving incentives and rewards over and above regulatory limits. Let's get on board Hari Radhakrishnan, Regional Director, First Policy Insurance Brokers. Hari, good evening and welcome to the show. Now, before I get into this new proposal, I want to understand what's exactly the expense on management cost. What's the structure that we are talking about, which is proposed for a change?
Say, for instance, if an insurance company is operating, then it has to operate within certain expenses of management. So this expenses of management is expressed as a certain percentage of the total premium that they collect. So for instance, if a company has 100 crores of premium, and if 30% is the expense of management limit, then it has to operate at an expense of management of 30 crores. So it means the salaries, the cost of acquisition, establishment costs of running the business, all those things have to be managed within this 30% or this 30 crore level. So this is how the expense of management regulations work.
Now explain, we just want to know how this commission working actually works out traditionally. Before we talk about the proposed change, how is it working so far? What's the entire calculation and the share for each stakeholder?
Currently, the commission rates are prescribed by the regulator for each class of business, each product which the insurance company is selling. The commission rates are prescribed in the regulations as to what the insurance companies can pay. So now all those prescribed rates have been removed, and the insurance companies are free to price their products and pay to the intermediaries according to the requirements as to what they can afford to pay.
So, Hari, the kind of proposal we are talking about over here, so it has revised the proposal to cut agent commission, but then they are also flexible in deciding the commission amount. What are we talking about over here?
Yeah, earlier there used to be, say, for instance, motor insurance had 15% commission to be paid to the agent. Now it says there is no such 15%. It's up to the insurance company to decide. The insurance company may decide to pay 10% or none at all if they are sourcing the business directly. So currently that kind of facility is not available. The 15% markup used to be there in all the products, irrespective of whether it was being sold through an agent or through directly by the insurance company. So now the flexibility is there for the insurance company to moderate their pricing according to the channel they are selling. It is not regulated. The commission rates are not regulated.
Talk about commission rates, okay, especially talking about life insurance where there are steep commission rates, it actually works against the interest of a policyholder. Now, these set of proposals, how do you think would actually work in the benefit of a policyholder? What kind of advantage or relief do they have on premiums?
There will be better options for the customer. So the commission rates are unbundled. So if the insured or the customer wants to engage the services of an intermediary, he can go to an intermediary, and then his pricing will include the commissions which are paid to that intermediary. If he wants to go to a platform like Bima Sugam, which the regulator is planning to put up, then he might be getting a product at a much lesser commission or no commissions at all. So the customer gets better choice. He can get a cheaper price for the same product if he buys directly than if he buys from an intermediary. So he gets a choice and he gets better pricing hopefully once it gets implemented.
But Hari, if I want to compare this in contrast with mutual funds, banking or other financial services, do you think this entire new regime of commission would be at par with what's already existing in the other financial sectors?
See, the insurance selling is not really comparable to that in that sense with the mutual fund industry, because mutual fund is a investment product, but insurance is a protection product. So, the effort required in selling is also different. Insurance being a push product, yeah, people have to be persuaded to sell. So there is a higher cost of sales associated with insurance product, whereas that much of effort is not required for mutual funds because it's an investment product. You get your money back depending on the market conditions. So these are not really comparable. But what the regulator is trying to do is to get away from prescribing any commission rates or what the insurers should pay to an intermediary. They are setting it free. So the insurers can decide what they want to pay and to whom they want to pay. So that flexibility is being now given to the insurance companies to decide.
Do you think, from a policyholder's perspective, it's actually a step back, because in August the proposal, it actually raised high hopes for high commission payouts being reduced significantly, and after that, giving the flexibility might not directly net impact a policyholder. When we talk about transparency and uniformity, that's somewhere not expected now.
So that we have to wait and see to what extent all these things will translate into reality, whether the insurers will be able to pass on the benefits of the deregulation of commission and all those product freedom which has been given to them. To what extent they will be passing it back to the consumers, that remains to be seen. But they have the opportunity and they have the wherewithal to give flexibility and better pricing to the customers. But if they bundle it and if the pricing opacity is maintained, some channels benefit out of this kind of free pricing regime, then it might not be in the interest of the customer. So one will have to wait and see how this eventually pans out.
See how it's being rolled out, but then how do you think it will eliminate all the dubious practices of giving incentives and rewards over and above the regulatory limits? Do you think that will be curbed?
That can be only be curbed through enforcement action by the regulator. Now there is a 30% cap on the whole expenses of management. So whatever you pay to whomever you pay, you can't exceed that. Now, if an insurance company is overpaying, then naturally this 30% cap will be breached. So what will the regulator do if an insurance company breaches that limit? It all depends on that. So if the regulator is forcefully enforcing the 30% limit, ensuring that commissions are not overpaid, or the policy holders are not taken for a ride, then of course it will benefit the policy.
All right, so that's the latest IRDAI's proposal on agent commission, and as Hari Radhakrishnan also says, that we need to wait and watch on how exactly it's been implemented by insurance companies, and that's when the policyholders might also get the clarity. Thank you so much, Hari, for being on the show and explaining all this to our viewers. And with that, we'll take a short break, but then post that, let's get your financial portfolio answered by Rishi Mehra.